Hey, what's going on, guys? It's TerrenceRe, and we got a stock market update today. What would the Fed do? Will the Fed remain hawkish? So, if you don't know, Jerome Powell is scheduled to speak today around 1:30 Eastern Standard Time. And what I believe, I don't know for sure, but what I think is that he's going to come out, or he's expected right now to you know, remain hawkish. Basically, talk the market, keep the market or where it's at on a down, toward what lately it's been up, but he wants to talk it down. Basically, they don't have to, um, if they can talk the market down, then they don't have to use certain measures to push it down or to make it go down. And so, and then that's what it means to be hawkish. The opposite of that would be dovish. And dovish would mean just that he has a more positive outlook on the economy. So I look to for him to be negative, more negative than positive, and to keep the market on a downward spiral. Now, whether that happens or not remains to be seen. But if you're looking at this chart now, what I have up right now, let's give a quick rundown. Then we're gonna get into some technical analysis, and we're gonna talk about some possible trades. Let's go to the buffer real quick. So the VIX is up about 1%. I'm on Trading View right now, and I'm on Trading View for a particular reason you're gonna see in a second. The VIX is up 1%. We got the SPY down about 1/4%. The Nasdaq is up a little bit, flat. Not a lot, but it is green on the day. The Dow is down, which is right here, DIA. That's the Dow ETF is down about 0.5%, and the IWM, the ETF for the Russell, is down about 0.35%. The bonds are relatively flat, and gold is up about 1/4%. We got the XLF and the XLE are both down, so that means the financial ETF sector, and the energy sector are both down on the day. Now, when I see that, I generally remain bearish in my outlook as well. When I see the financials down, the market, if the financials are down, I don't look for a rally in the market. Now we do have the Fed chair speaking today, so that could change. Now, looking at the SPY, when I say, well, you can see we're in kind of like of a channel. If you're looking at it, if you can see this high here, and from this high we got to break down. This high we got to break down. This high right here we got to break down, and now we right back here. And if I draw a trend line, I can draw a trend line pretty close from here to here. Let's do that real quick. We're going to talk about a harmonic pattern in just a second. Basically, I can draw this trend line and get 3 touches right here. See that? 1 touch, 2 touch, 3 touches. Now, will we get up to make another touch, or will it just break down here? Now, let's talk about, when I say harmonics, I'm going to come to the IWM because it looks a little better over here. Same type, right? You see? Yeah, you got to here. Now, it's a little bit. If I drew this line from here, I probably would get a touch here. I won't get 3 touches. But let's look over here recently for this harmonic pattern. Move this out the way. So we got a down move, a pullback here and here. Harmonics, generally, you will see them in reversals, like a reversal to the market. So you kind of get like a W-like pattern when the market is getting ready to go back down, and it'll be like an M, and you'll get it to go up. And I'll show you exactly what I'm talking about. let's draw this out. Hit that like button, hit that subscribe button while you sitting here watching me cook. Let's find harmonics. We're going to do right here. So it will look like so. Here, it's your X to A to B, C, and this would be the D right there. And so this is my harmonic. There's a book. I think the guy's last name is Carney. I can't remember. He got like 2 or 3 volumes. I read 1 or 2 of the volumes of it. And he gives these, and these are based upon Fibonacci ratios. So if I was to bring this down and tighten this up, come down to like a 1 hour, it'll be real tight. So now you will see it look like so. And generally when you get a completion of a certain level, now this, now I can make it real. I can make it the way I need to make it. Is that right there? Let's cut this magnet on because it'll snap to the, there we go. Snap to that, there, and there. And boom. That's what it looks like so. Now when you get these, and then you can see from here we got a gap down, right? And so you see looks like we made a low today, took out this low. So what I put on today, I sold a call spread in the IWM. And I'm gonna go over it. I'll go over it at the end of this video. We'll take a look at it. Now, the news could come out, Powell could be come out and talking crazy and fire this market up, right? But that's fine. I trust in my analysis, and if I'm wrong, I'm wrong. You know, I'm comfortable with the risk. But this is where I got the trade from. This would be a harmonic pattern. This is a reversal from this little up move that we got to come up out of this channel. Let's draw a trend line here from this low. If we were to bring it, we'll draw it right here. Come right through here. I mean, let's do it like that. So if we had it here, and then let's draw another trend line from here. And you can see we kind of like, do it like that. Kind of like observing that channel. And if, I don't need that. Remove that. So, like so. So we got a little channel coming up through here. And instead of it continuing to stay in the channel, then you get this harmonic pattern. And then boom, we got a gap down here. And it looks like it's getting ready to start a down move, right? And we could get something down in here maybe to close this gap on the IWM. So all I did was I came out, I seen that this morning, and I wasn't even sure I was going. When I woke up, we had some rain, my internet wasn't working. They got it back on. I seen this. So let's come on and let's talk about this on the trade setup. Now there are many different ways that you can trade this. If this is your assumption, this is my assumption. I would rather sell the call spread and then let's just see what happened, right? I closed out I posted yesterday. I closed out the Iron Condor and the EWZ for a winner. I did close out the put spread that I had in Caterpillar. I did that today. It was like a $15 loss. And the reason why I closed it out is because I didn't get the big move I wanted, right, to the downside. So and instead of just sitting there waiting at that time, just hoping, I just take that little small loss and move on to something else. That's why now if I had a sold that spread, then I probably would sit in it because then I'd get paid for time decay. Something like this, it can go sideways and I'd be cool with it. Now, guys, there's no guarantee that it's gonna go down. Like I said, Powell can come out, be dovish, and then talk this market up, which is fine. Then I'll just I did it 16 days out. Let's pull it up and then we can talk about some defense mechanisms for if it doesn't go the way that I want. We're going to stop showing this. Then we're going to bring up, where is it at? Let's pull up There we go. Let's present. There we go. Let's cook. Now, let's talk about, let's go to the position tab. Here we go. It's down about $8 already. Now, let's go to here so you can see I'm in 16 days. And the reason why I'm in 16 days is because if I get the move, I want to close it out today or this week. I don't want to wait. See, here I am, 186. I sold the 36 Delta, bought the 18 Delta. So this is the trade. Now, with that being said, if I don't get the down move that I am anticipating, right? Let's say this market, it doesn't cross over this right here and it continues to go up. Well, I sold the 186 and took in about 135 in premium. So that means my break even is about 187.35, somewhere up into here, right? If it goes up to 186, then what I'll do is I'll roll this trade out. I just take this, I'll buy this here, sell this, and then I'll go and then roll it out to 51 days. I can come out to here and then place that same trade out here. And then that'll give me more time. That's my defense mechanism for if I'm wrong. And we can go, let's go to the Analyze tab and let's take it out, take a look at it. You guys will be able to see it. Here we go. And so and you can see it's gonna, I got 16 days. And you can see where my break even is right here. See with the green, you can see my probability of profit is 72%. So it's a high probability trade. And my break even is about, right here. 187. You can see like right around 187.35. So hey guys, and once again, that is a call spread, selling a call spread to get short and trade this assumption that I have in the market. If we take a look at, let's pull up, you can see right here, the MACD has crossed over. So, it's not, sometimes you're looking for like, if you look at the histogram, we got divergence on the histogram. You see the market was going up, got divergence on the histogram. So I got a confluence of indications. Got even on the RSI, I got some divergence on the RSI from this high to this high. So let's see what happened. Let's see if I'm right. And hopefully I am. Maybe I'll make another video if we get a big move today. Like I said, guys, I took in, if we come look at the position tab, I took in 135 in premium. If I get the move, I'm looking to close this out today. I won't hold it. I'll take, $60-$70 out of the trade, look to move something out. This is a small trade. This is something that anybody could do. Got a small account, a couple grand in the account, you can do it. And to be honest with you, can do it with, if you got $1,000 in the account, you can make this kind of trade. So these are small trades, and you got a big account, you say, man, hey, I got 100 grand, I got 500,000, you got $1 million account, you can do 10 of them, 20 of them, do it but be comfortable with your risk. Don't just follow me into this trade blindly. If you don't have that type, if you bullish, hey, you think the market's gonna go up, you can do a put spread. I'm making this trade to get bearish based upon some technical analysis that I see, and that's totally it. Not what they say on TV or anything else. I could care less. What's being said on TV. So hopefully you guys got something out of this. Comment what you like, what you don't like, what you think. Comment on the trade. Comment what you got going on and what you think is gonna happen. With that, guys, I'm out. Peace.